I personally believe that Bitcoin is not just a little bit better than gold, but structurally 10 to 100 times better than gold, and then also should be 10 to 100 times more valuable than gold itself. And what do we have currently? Currently, gold is more than 20 times bigger than Bitcoin. Now, what happens when Bitcoin is not 10 times bigger than gold, but just as valuable as gold? We would be at a Bitcoin price of 1.84 million US dollars. And today we are talking about this and macro signals, the gold rally, and why Bitcoin's next move could not only be bigger, but also closer than you might expect with the one and only Joe Consorti. Enjoy. We are, it seems like in a Bitcoin winter.
You know, Bitcoin is underperformed pretty severely, right? Everybody was under the assumption, number one, that Q4 of 2025 would be fantastic. We're in this range that resembles 2022. Now, if you'll take your mind back to 2022, you can remember in 2021, we had the first top that was in May. We had another top that was later on in December. And then throughout the year in 2022, the vibe was Bitcoin's going to 100K. Obviously, in the first couple of months of 2022, that wasn't the case. We fell all the way down to $40,000 from $69,000, which is very similar to what we've experienced now. And then Bitcoin really struggled for a while. It consolidated for about a month to 3 months, and then it ended up breaking down. It broke down below the 200-day moving average. It broke down below a couple of other key moving averages, and then we ended up falling 75% peak to trough. Now, the only difference in my mind that I see this time around is that the time it took for Bitcoin to go from $15,000 roughly, where it bottomed out in 2022, to its high of 126 grand in October of 2025 was about 3 years, right? So a 3-year bull market that wasn't really dominated by these huge blow-off tops and then this these massive sell-off periods. So because the bull market was so measured and slow, I don't think on the other side of it, it stands to reason that we would see a massive sell-off on the other side of this thing. So we didn't have an explosive blow-off top. I don't think we're going to see a 75% drawdown. That said, Bitcoin is kind of at a critical inflection point right now, and there's no real narrative that people are interested in to prop up Bitcoin, right? The two key narratives that are dominating markets right now are the debasement trade, and gold is sort of sprinting with that. Gold, silver, the monetary metals that have historically acted as debasement hedges. And then the AI trade, right? The S&P 500 is increasingly concentrated in tech companies. You have NVIDIA, Meta, Apple, Google, Microsoft, all crushing it. Still the top 5, top 6 companies in the world. And Bitcoin is kind of just left there after 3 years of outperforming everything. And naturally, Bitcoiners have a lot of recency bias. And so if our asset is not the one that's outperforming everything, even for a short period of time, like the last couple of months, we get upset and we think Bitcoin's dead, or at least a lot of people do. So that's kind of where we are right now, general market vibe before we dive in here and jump into the show.
I love that because the recency bias is so big. We always think like what the last 1-2 months have all been about is how Bitcoin is currently doing. And it's just like, yeah, just move out 2 years or 4 years or 5 years. Even like, I think you should be in Bitcoin at least 8 years. Do just be very, very disappointed of Bitcoin just because of like short-term outperformance of another assets is usually for me a sign that you haven't really put the work in what Bitcoin actually is, and you have to look deeper. But it's interesting that gold has been performing so good. Like the one thing is that Bitcoin isn't like blowing off top and isn't like hugely appreciated in price. But the other thing is what is happening actually with gold. When I saw it the first time hitting like 4K, I was like, yeah, like that's pretty significant. And then just a couple of months later, it is hitting 5K. Like gold is almost performing like a meme stock now. That's crazy.
Yeah, it is quite insane. So I'll share my screen here and kind of show folks the charts. I love the charts. I think viewers really love the charts as well. So I'll go ahead and share my screen here. This is a chart of gold. You can see here, since the bottom that we saw in 2022, which is right around the time that Bitcoin bottomed as well, Bitcoin is up about 350%. So it's still outperforming gold relative to both of their cycle bottoms, but gold is now up 228%. So to put in context how insane that move is, gold is a $36 trillion asset right now, right? A $36.5 trillion asset. It's about to be larger than the size of the entire US debt. So it's already larger than the size of the marketable US debt market. So we're talking about US treasuries, right? Bills, notes, and bonds, the investments that investors can invest in that are issued by the US Treasury. But we're approaching the total size of US debt. Just to give context as to how insane this move is, a 228% move in a single name stock that may be, $1 trillion, $2 trillion in market cap. It's not that wild, right? It's what Bitcoin has done. Obviously, Bitcoin went from a sub $500 billion asset to a $2 trillion asset over the course of 3 years. Gold has managed to go from roughly a $15 to $20 trillion asset to a $36 trillion asset in the span of less than 3 years here, or a little bit over 3 years. So that's how insane this move is. Now, a lot of people are wondering, why on earth is this happening? Well, I mean, obviously, number one, you have to think about what gold performs as historically, why investors buy this thing in the first place. And they buy gold as a debasement hedge, right? As a hedge against monetary inflation. But also, global central banks, why on earth would they buy gold? Well, you have to think about what's happening right now globally. We're witnessing this deglobalization, this trend away from an economy where the entire world is working with each other. We have free and open trade, to one where borders are more closed, trade is less open, and you see a nationalization of industry, or at least an attempt to nationalize industry. And so that's exactly what we're experiencing now. And amidst that, we're seeing this trend of de-dollarization. So China and Russia obviously have been de-dollarizing for quite some time. There's been talk of BRICS, right? This new gold-backed currency. That's not necessarily underway as fast as a lot of people would like it to. But one thing that is underway is, rather than purchasing US treasuries for their reserve, they're allowing all of these large global central banks, these institutional allocators as well, they're allowing their US treasuries to mature, even though we still are the world's largest sovereign debt market, and they're purchasing gold instead. So that's one of the main dynamics at play here. We're seeing this shuffling in the global order, where investors are moving away from the US dollar as their base layer reserve asset and toward gold as their base layer reserve asset. You layer on top of that the reality of the debt situation, not just here in the United States, where debt to GDP is around 120%, where we've been running persistent fiscal deficits, so spending more money than we're taking in for several years on end. And investors are positioning for just massive price inflation, right? In the United States, price inflation, officially reported by the CPI, has been above target at 2.7% for going on 3 years now. Since actually for going on 5 years now, right? Since price inflation began rising after COVID, when they injected the economy with all this money, we never have managed to break back down 2% after rising above it when inflation was on its way to 9.1%. That problem that we have in the United States is much worse elsewhere. China is facing a much larger debt crisis. They're facing a much larger inflationary crisis. And so basically all of these factors are coming to a head, and they've driven gold to absolutely insane heights over the last couple of months.
So it's just people realizing that fiat is dying, that the money dies. Like I think you mentioned it before we started recording. It reminds you of like when money dies.
Yeah, exactly. So if anybody has seen that chart of basically, during Weimar Germany, right? And this is a chart that gets cited a lot when Bitcoiners are talking about currency debasement. It was a chart that was in the Bitcoin Standard. Basically, it's this chart that shows the price of gold in German marks. And what had happened was, during this period of inflation that eventually led to hyperinflation, gold started going parabolic. So a parabola is essentially what you see here, right? An accelerating rate of growth on an asset priced in a denominator that's rapidly inflating away. Now, during Weimar Germany, obviously they experienced hyperinflation, and all of a sudden gold went from a few thousand marks to tens of thousands of marks to a few million marks to 10 million marks plus. And this was as the currency in Weimar Germany was rapidly being devalued. They were experiencing hyperinflation. Now, it's extremely difficult. This chart is in log scale, and the chart that I'm referencing was also in log scale. It's extremely difficult for any asset to go parabolic in log scale because the y-axis is exponential. This is a fantastic chart right here. You could see the percentage change in gold's price in red and the gold price at Weimar marks in black. Now, what you'll notice is The gap between 1 and 100, 100 and 10,000, all of these are 10x, right? Or 100x rather, right? So the jump from 100 to 10,000, that's 100x. The jump from 10,000 to 1 million, that's 100x. So on and so forth until in the upper limits, you see 10 billion and then 1 trillion, I believe. So ultimately what this is showing is that you're not just getting a consistent linear devaluation in the underlying fiat currency, you're getting a rapid exponential devaluation in the underlying currency. And that's very similar to what we're witnessing now with the rise in gold. At every single turn, Robin, you mentioned it, $3,000 gold sounded insane. And then $4,000 gold sounded insane. And then all of a sudden, we thought that these rallies were over. Gold reached like $3,500. It pulled back. Gold reached $4,200. It pulled back. Then all of a sudden, here we are, just 3 months after gold hit $4,200, and now we're at $5,200, right? Adding several trillion dollars in market cap as the weeks go by. This is not healthy, right? This is an indication that investors are running for the exits. They're recognizing that the trend of debasement is accelerating, and they want to hedge themselves against that. Now, the good thing for you and I, Robin, is that we understand Bitcoin is a superior hedge against monetary debasement because of its monetary properties. Gold is relatively scarce, and so is silver, right? Safedine Moose writes about this in the Bitcoin Standard. Whenever you see a bubble in silver in particular, and this applies to gold as well, but any monetary metal whose supply schedule can change, whenever you see a rise in the silver price or any commodity price, what does that do to producers? They say, okay, it's going to be much more profitable for us to increase supply. We're going to get new mining equipment. We're going to go purchase new land. We're going to dig up more silver and more gold than we had previously, and that naturally depresses price. Bitcoin doesn't have that. Right. So while the market might not be coming around to that reality yet, while Bitcoin is still only trading at around $90,000, again, by the time this airs, that may be different. And the gold and silver price may also be different. You and I both know, and a lot of people in the know understand that Bitcoin right now is severely mispriced because whereas gold and silver can have their issuance schedule increased because of a rise in price, Bitcoin cannot. There is no supply response function. It is a perfectly inelastic supply. And that's one of the amazing things about Bitcoin, that the move you see in gold right now will pale in comparison to the eventual move in Bitcoin if and when the market inevitably comes around to the way that Bitcoin should actually be traded, which is the world's best hedge against monetary debasement.
There's also an interesting data point. When I came into Bitcoin, we looked at when will Bitcoin flip gold. So what is the point? What is the price point for Bitcoin to reach the flip gold? And I remember roughly it was around 500 to 800K. I'm not sure like what exactly the point was. I just calculated with 36 trillion US dollar market cap of gold. That point is now 1.8 million US dollars. So it's like more than 2x, almost 2 million Bitcoin price that we just flip gold. What does that mean? The underlying currency that we're measuring both in, the US dollar, is just devalued at a rapid pace. And this is just, I'm in Bitcoin now 5-6 years. So this is like really rapid growth. Now I'm really thinking, when will Bitcoin actually flip gold? Like what price point? Like maybe it's 10 million because the US dollar is just faster and faster dying. I don't know. But if this continues like that, we obviously come close and closer to Bitcoin. By the way, I hear this thing is like, oh, gold is rallying up to Bitcoin. I'm like, no, like gold is catching up with Bitcoin a little bit what Bitcoin did in the last 15 years. And it's not even close. So I like those charts where you see like 15 years of Bitcoin growth. And then there's like this like 1 year where gold is getting a little bit of a headwind. So that's super interesting for me to look at, like when Bitcoin actually might flip gold.
Yeah, so a couple of thoughts there. And I didn't realize that we were already all the way up to $36.8 trillion yesterday. And it's airing in a couple of hours as we film this in January. I filmed a show with Joe Burnett from Strive, previously the director of Bitcoin strategy at Semler Scientific. And we were talking about how gold was a $35.8 trillion market cap. So in the last like day and a half, it's added $1 trillion in market cap, which is just insane. And so when we talked about Bitcoin gold parity on yesterday's show, it was at 1.75. Now it's at $1.85 million per BTC. So the way you arrived at that was taking the gold market cap, which is $36.8 trillion, dividing by the current Bitcoin supply, which is roughly $20 million. And thankfully, over the next 114 years, it's going to stay at roughly $20 million, 20 million BTC. And then the last 1 million BTC will be mined over the course of the next 114 years. You divide the existing gold market cap by the current Bitcoin supply, $1.84 million. And you point out something really, really important, which is that just a couple of years ago, right, when gold was sitting at $2,000, Bitcoin gold parity was actually reached below $1 million, right? When gold was a sub $20 trillion asset, the eventual rise of Bitcoin, eventually meeting gold's market cap, which is what we call Bitcoin gold parity, or when Bitcoin catches up and takes over gold's size, was at $900,000. In just a few short years, that's risen to $1.8 million. And so if we factor both of these things together, number one, the exponential rise of gold, and number two, the eventual parity of Bitcoin and gold, then ultimately the price at which Bitcoin overtakes gold, which in my view and in your view and most of the viewers' opinions will inevitably happen, will just continue ratcheting higher, right? And so, for instance, when gold is a $10 trillion asset, when one individual ounce of gold is $10,000, then Bitcoin gold parity will be $3.6 million, right? When one individual ounce of gold is $20,000, if we get there as currency dies and more people continue trading gold as a debasement hedge, then the eventual Bitcoin gold parity will be over $7 million. And then eventually you get to $10 million per Bitcoin, which could be the point at which Bitcoin overtakes gold. If these two dynamics continue, number one, gold rising relative to Bitcoin, and then number two, Bitcoin ascending and adding market cap faster than gold, which is not where we are right now, then eventually the US dollar price at which we overtake gold will be exponentially higher than it is today, just as we've seen over the last couple of years. It's a startling development to see, but frankly, it's not one that I'm surprised about. Given what Bitcoiners have spoken about, what gold bugs have spoken about, ultimately, we're both on the exact same train, which is that currency debasement is a never-ending trend. It's something that you cannot stop. Every fiat currency eventually dies. We've just figured out different solutions for it, right?
What do you make with silver? I mean, gold is logical. People want to buy it. They trust it. It has a huge, it has a very long track record of doing what it's doing. What is going on with silver?
Yeah, so silver's a bit different. I'll share my screen here. This is a chart of silver, again, over the last 10 years. You could see that basically for 4 years straight, silver was roughly the same price, right? It was trading within this range from $18 to $30. And that's what people forget, right? They look at the last couple of years of gold performance and the last year or so of silver performance, and they say, well, look at they're trouncing Bitcoin. Bitcoin isn't doing anything. But if you think back, right, Bitcoin managed to go from $3,000 in 2020 all the way to $90,000 today, more than a 30x, right, which is much more than both gold or silver have done since that same period. But regardless, you take a look at what has happened to silver recently. Number one, it's a little bit of the same currency debasement dynamic at play, right? Silver obviously is a much lower market cap monetary metal. It also has a higher stock to flow ratio in that it's much easier to produce new units of silver than it is to produce new units of gold. And so over time, we have seen a couple of different silver bubbles, if you will. And those are much easier to reverse from a supply perspective than gold. Gold is much more difficult to find. That is why it's much more valuable than silver. If we talk about the monetary metals from the perspective of a stock to flow ratio, which is the amount of existing stock relative to the amount of new stock of the currency metal coming online, gold is superior in that sense. And so silver has this tendency to have these bubbles, but then they quickly deflate. So number one, it's that same currency debasement dynamic at play. Individuals are rushing into silver. It just so happens to be a much smaller market cap than gold. Right now, it's about a $6.5 trillion market cap compared to gold at $36.8 trillion, which by the time we air this show, it could be $40 trillion. And so a much smaller amount of capital has a much more outsized move on silver than it does for gold, right? So that's number one, the exact same currency debasement dynamic at play. Number two is there's this tremendous industrial demand for silver. You needed to build basically everything worthwhile, particularly computers and chips. And so this lines up with the trend of the boom in AI capital expenditure that we're seeing, not just here in the United States, but also in the West. Back in the 20th century, we had the Cold War. this race, this sort of nuclear arms race. We also had the war for between us and Russia, who would get to the moon first. Now in the 21st century, it's a little bit different. We're seeing a chip arms race, right? We want to be the manufacturing center for the world for these chips that are so relevant and so needed for AI, right? The rise of AI has been absolutely insane. A couple of years ago, we went from chatbots with ChatGPT that could barely do anything that's worthwhile to most recently Claudebot, which has now been renamed. I can't exactly remember what. These personal AI tools that people can build in their home. It's only becoming more relevant from a business perspective, from an individual perspective. And so the demand and the need, the industrial demand for silver is rising exponentially. And so that's driven the rise in silver as well. So you have currency debasement and industrial demand. And then the third factor, which not a lot of people are talking about, is China's very own debt crisis. So I alluded to at the start of the show, the crisis we're facing in the United States from a fiscal perspective is felt tenfold in other less developed nations who have a much smaller and less in-demand sovereign debt market than we do. So take China, for instance. Their debt crisis is much worse than it is here in the United States. Now, I won't claim to be an expert on it whatsoever, but that's one of the reasons you're also seeing a parabolic rise in silver. And then sort of playing into that is that China has had export controls on silver as well. Starting on January 1st, which coincidentally on the chart is sort of when you saw silver go from around $65 to $70 all the way up to $114 today. China put export controls on silver. So very strict export controls on the amount of silver that can exit the country. And so naturally, when you restrict supply of an asset, that's going to lead to a huge increase in price. The thing with silver and the thing with gold more broadly, but speaking specifically about this export control, is that this supply constraint being placed on silver is artificial. Right. Similarly, the supply constraint on silver is only limited by the amount of machinery and other physical capital that is being put into the ground to drudge up silver right now. And as I mentioned, when the price rises, and inevitably when this export control gets removed, that puts natural downward pressure on the silver price. So it all keeps coming back to Bitcoin, right? These export controls cannot be placed on BTC, but they can be placed on gold and silver, creating artificial upward pressure. So those are the 3/4 factors that are at play that's causing silver to have this monumental surge. But between both silver and gold, right, these supply constraints inevitably get removed, right? There was a stat that Joe and I were talking about yesterday. I think some 35 until about 100 years ago, only 35% of today's of the gold, the total gold supply was mined, right? And then over the last 100 years or the last 50 years, I can't exactly recall, the remaining 65% of the current gold supply has been mined. So for all of human history, right, up until about a century ago, we had only mined about 35% of the gold, and then 65% of today's supply was mined over the last century. So what does that tell you about the century that's still to come? Right? It tells you that gold supply is coming online at a much more rapid clip. So even though we have this tremendous debasement that's driving a rise in gold's price and a rise in silver's price too, the reality is that the technology to actually create new supply is increasing at such a rapid pace that chances are it very well may outweigh the function of the price going up because of dollar debasement. Again, Bitcoin doesn't have this problem, right? It has a predictable supply schedule. It has absolutely scarce monetary policy, whereas the same cannot be said for gold and silver. So that's what's going on with silver. I went on a bit of a tangent there toward the end, once again explaining why Bitcoin is superior. The market just hasn't caught onto it yet, but that's kind of where we are from a silver perspective.
This is a factor that I think not a lot of gold people realize. How drastic robotics, AI, space travel, and in general just deflationary technology will change how we can get to gold. And if the gold price rips to, let's say, 100K, there will be a lot of incentive, a lot of really great companies digging the gold up, developing robotics, developing AI to figure out where it is. Space travel is a huge thing where is there a huge amount of gold somewhere in the space that we can find somehow and get back to? I have no clue about the logistics of it, but I'm sure as we develop technology, we will have cheaper and better ways to actually get to the gold. With Bitcoin, that's just not the case. And even if it's not true, just the risk of that I wouldn't put like I wouldn't bet my life on like us not finding more gold on the ground or in space.
Yeah. So, speaking of that, a lot of viewers may not be aware, some may be, but there are asteroids out there that we can track, we can find that have more of the gold, more gold in them than our existing supply that's estimated to be on Earth. And so, what happens when those companies the companies that are going for this can successfully land on an asteroid and mine gold out of it? I just did a quick search of a couple of the companies. You have Astroforge and TransAstra, both in the United States. Those are the two leading companies that are actively working and developing technology for deep space resource extraction. So mining asteroids for gold, platinum, other precious metals, these are already underway. Right. And what do you think happens now that we're moving from generative AI into a world where we may have artificial general intelligence? Right. The development of the technology that these companies need and are using in order to land on these asteroids, extract the materials, and then come back to Earth are accelerating. Right. So, the gold and silver train, I don't expect them to end anytime soon, but anybody who's investing in them needs to understand the tail risks associated with owning the asset, such as the fact that there's gold on asteroids and there's an infinite number of asteroids that are always going around in space. And so when the technology arrives, not if, when it arrives, it's going to have a massive supply impact and potentially double, triple, quadruple the amount of existing gold that we have here on Earth. So it's something for everybody to consider and understand that that's a risk that's not part of Bitcoin, right? Nobody will go into the Bitcoin code and discover some kind of hole that allows us to increase the supply schedule up to 22 million or 30 million or 50 million. Bitcoin does not have that risk. It doesn't have the risk of some new technology coming online and being able to double the terminal supply, but gold and silver do. So while in today's world, right, in the analog world, as we transition into a more digital focused world, they do serve as the best debasement hedges just because that's how people have traded them historically. But as we move into this digital world, right, where technology is advancing at such a rate where we can increase the supply schedule of gold and silver, artificial intelligence becomes a part of everyday life. Ultimately, more people will come around to the fact that in a digital world, analog stores of value just do not cut it.
The first thing that every Bitcoiner does, and the most important activity that every Bitcoiner keeps on doing, is buying Bitcoin. And I personally use Relai to buy and sometimes also spend or sell my Bitcoin. And there are two main reasons why I do so. The first one is it's Bitcoin only. They do not do any shit coins. They do not do any cryptos, any stocks, or anything else. This is a tool, an app that is fully focused only and solely on Bitcoin. The second one is self-custody. They give you the keys to your Bitcoin the moment you buy them. You never give them the control over your Bitcoin, and you don't have to trust them because you can verify that you and only you have the keys to your Bitcoin. There's no third-party risk. There's no freezing of your assets. There's no rug pulling. There's nothing of that. Download Relai, the app, on your phone, or go to relay.app on your browser and use code Robin to save fees and get cheaper Bitcoin. I want to tell you about something very special to me. It's called Microseed. If you hold your Bitcoin in self-custody, and you should, you know how critical it is to secure your seed phrase. You should not have them on paper. You should not have them on anything else than titanium. With Microseed, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer. All 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups because Microseed is not selling the washer. Microseed is selling the device that stamps the washer. So you get the full kit with the device, with the washers, with the hammer, with everything you need to get started today, and you can make with that unlimited amount of backups. Go now to microseed.io. How do you think about gold being a leading indicator for Bitcoin as it comes to price?
It's a really good question. So historically, it's been quite a reliable leading indicator. I actually have a chart pulled up on screen here. which is Bitcoin versus gold with a 100-day lead. The caption here is that gold moves first, Bitcoin moves harder. This chart is originally from Dave Foley from the Bitcoin Opportunity Fund. They're doing amazing work investing in Bitcoin native companies and trying to further the ecosystem. But he put this chart together with Lawrence Lepard, and basically it shows that time and again on a variable lag, whether it's 100 days, whether it's 300 days, gold tends to move first ahead of Bitcoin, and then Bitcoin follows much harder, right? So on this chart, you could see here, this is the scale of gold. This is the scale of BTC. Bitcoin pretty reliably tracked, at least over the last several years, gold on a 100-day lag, right? Especially since 2023. So you could see we saw a small move in gold from 1,800 to above 2,000. Bitcoin had a move from $41,000 all the way up to $74,000, so on and so forth. And each time that gold rallied, Bitcoin rallied about 100 days later. Now, this pattern was broken in about July of last year, right? So obviously the gold price is the one we see today. Bitcoin is lagged by about 100 days. Back in August, right, gold embarked on its latest rally. We saw throughout the summer of 2025, gold consolidated around $3,400. And now over the last 4 or 5 months, it's absolutely ripped from $3,300 to $5,200. Now, the assumption was that if this pattern continues holding, then Bitcoin will have followed it. And at this point in time, right, January 2026, Bitcoin should have or would have been anywhere from $150,000 to $170,000. But clearly that's not the case, right? Unfortunately, this correlation is broken. It's broken down in a pretty substantial way. And so, the reason for it in my mind is simply the fact that because the currency debasement has become so pronounced, people are flocking to what they know. And Bitcoin and gold, sure, there is some kind of lagged relationship here. However, Bitcoin has a much stronger correlation historically to other risk assets, to the S&P 500 and the NASDAQ, as well as single stock names. And so if you take those two factors into consideration, the dominant force that's at play right now is Bitcoin's risk-on behavior. I've talked about this with you in the past and on several other shows that I've done, and I've alluded to it during this show. But even though Bitcoin has the monetary properties of a commodity, it's absolutely scarce. Nobody can change that. There's a fixed supply. It trades like a tech stock, unfortunately. So rather than trading for its store of value attributes, it trades for its technological attributes. And that's a massive informational asymmetry. And so really what I'm witnessing here is simply investors are more interested in the way that markets have traded stores of value versus what could one day prove to be a store of value. And so basically the reason in my mind Bitcoin is underperforming gold now is because markets still have yet to realize Bitcoin's actual attributes as digital gold, right? This is a term that's been thrown around so many times, but ultimately the better way to view it, because of what we're talking about Bitcoin's monetary properties being superior than gold, is that gold is simply analog Bitcoin, right? In that it has all of Bitcoin's attributes, but it's a little bit worse. Gold has a terminal, absolutely fixed supply of 21 million. Gold does not, right? It's tough to create new supply, but it's not absolutely scarce. You cannot bring gold across borders. You can put export controls on gold. None of that is the case for Bitcoin, right? So gold is this geopolitically neutral asset. Bitcoin is infinitely more geopolitically neutral. So that's the reality of these two assets. But judging by the chart that I just showed, the market simply hasn't come around to that yet, right? I'm of the opinion that eventually this asymmetry will close. Bitcoin will catch up to what gold has done. But what I will say is that after 3 years of just substantial, completely insane outperformance, 4 years rather, of Bitcoin going from $14,000 to $126,000, a couple of months of gold outperformance isn't going to hurt anybody, right? So I still tend to think that gold is a leading indicator of Bitcoin. It's just that there's this big asymmetry right now. Capital is fleeing out of high beta risk assets, and they're crowding themselves into gold and silver, as well as the AI trade. So that capital that may otherwise go into Bitcoin is not going to it at this point in time. But that's likely going to change, as it has always changed over time in prior cycles.
What do you think needs to happen for the market to realize that Bitcoin is more like gold and less than Tesla or Apple?
Yeah, it's a good question. More education. I always come back to this when this question gets asked. More education. the prevailing sentiment right now is that Bitcoin and crypto, I always put crypto in quotation marks, are the exact same, right? So when we talk about crypto, we talk about things that can be issued out of thin air, right? They have a centralized board of governance, they have a marketing department, and the number one commonality between all cryptocurrencies is that they try to associate themselves with Bitcoin, right? Bitcoin obviously doesn't have any rulers, right? It's rules without rulers, rather than these other cryptocurrencies, which do not have the attributes that Bitcoin does. So I think generally just more education, right? People need to be aware of and understand the differences between these two things, that Bitcoin is a completely neutral asset and its monetary properties are immutable. A lot of people don't understand this. They forget this. They think Bitcoin is a digital shiny rock, if you will, and it doesn't do much else. It doesn't store your value. It's purely speculative. But the reality is that Bitcoin in a world of fiat debasement is perhaps the most certain thing that there is. Obviously, I mentioned the supply dynamics of gold and silver, so I won't harp on that too much. But when you have a denominator that is debasing infinitely, right, and that is debasing at an accelerating rate, if you look at the DXY, the dollar index chart, it's cratering below levels that we have not seen in years. That's a signal that something in the world order is shifting. It's a signal that we're moving into a world where people value hard assets, they value hard money more than they do fiat currency. The only unfortunate aspect of that is that rather than flocking to the best hedge against that, which is Bitcoin, they're flocking to the monetary metals, which they've known, right, for the last several decades, the last several centuries, right? Time and again, when fiat currencies collapse, gold is what people rush to, right? During the time of the Roman Empire, what did they do to debase the currency? They clipped the coins, they melted them down, they mixed them with inferior metals, and you saw that over time. What we're witnessing with Bitcoin right now, unfortunately, is just a function of a lack of education in the market about what this specifically is. And so therefore it's traded alongside the tech bucket that it doesn't really belong in. And so it seems like a played out answer, and it seems like an answer that, anybody can say. But the reality is, like, when we talk about informational asymmetries, all that means is the market is pricing something differently than what it actually is. And so the way you correct that is with more information, more education. The upside of that, though, Robin, and for all the viewers at home, is that we understand Bitcoin's monetary properties. So we can purchase Bitcoin at a discount, right? If Bitcoin was trading the way it should be trading, it should be at $150,000, $160,000, $170,000 per coin if people understood that its monetary properties were the same as gold. In fact, it may be even higher than that, right? Because it has a smaller market cap, a smaller total size of the asset, but it's not, right? So Bitcoin is trading at a steep discount relative to its fair value. And so while we wait for the people with way more money than us to come around to this reality that Bitcoin well and truly does perform the same function as gold, just better, we can purchase Bitcoin at a very, very steep discount. And I thank God for that.
I love that. How much for that, how much of a role does also this the small market cap? I mean, small is always relative because we are like one of the biggest assets in the world with Bitcoin, but relatively to gold, we are a small asset. Relatively to the whole real estate asset class, we are very small. How much does that also has to do with people trading it like a stock, because it is a similar size than a big stock like a Tesla or like an Nvidia or any of those?
I would say it has very little to do with it. And the reason I say that is because silver, when it began its monumental rally, it was right around the same market cap that Bitcoin is now. And so I would say that Bitcoin having a smaller market cap compared to gold as a commodity, compared to Nvidia as a stock, has very little to do with the reason it's still correlated with the tech bucket. But it's interesting that you bring that up, because one of the fun things that we do as men and as Bitcoin is we project Bitcoin's price into the future. What would Bitcoin's price be if X, Y, and Z happen? It's like astrology for men. This is what we do instead of going to therapy, right? So silver was about a $1.8 trillion market cap before it began this monumental rally in the middle of last year. Bitcoin right now at $90,000, as people can see behind me. Well, they can't see behind me because we have this layout on the screen, but I have a block clock. It's about $90,000 as we talk. It's $1.8 trillion. And so what we saw right now, silver, if I check my screen here, is at a market cap of $6.4 trillion. So that's more than a 3x from a sub $2 trillion asset. And it happened in less than 8 months for silver. And so there's been this narrative that because Bitcoin is growing into a very large asset. It's $2 trillion in size now. It seems really expensive at $90,000 per coin. That's another education gap. People don't realize they can buy 1/100 millionth of a Bitcoin. Because Bitcoin is a larger asset than it's ever been before, Bitcoin's volatility is gone forever, and it's going to have diminishing marginal returns. And we're only going to see, a 15 to 20% compound annual growth rate on Bitcoin for the rest of time. But the reality is that what just happened with silver over the last 6 months completely throws that idea out the window. It managed to go from the exact same market cap that Bitcoin is now to a $6.5 trillion market cap. And if that happened for Bitcoin, we'd see a Bitcoin price well over $300,000 at this point in time. With silver, it was solely a function of waiting for it to happen, waiting for the proper conditions. And so when we think about this in the context of Bitcoin, okay, if Bitcoin is traded as a risk asset, what's the natural next move for it? Well, first, risk conditions in the United States need to improve. The S&P 500 and the NASDAQ and other equities have been doing all right. The S&P 500 is basically flat over the last month. The NASDAQ is up about 1.4%. Bitcoin being this extremely sensitive asset in the risk on bucket, you would think it would be higher than it is now, but it isn't, which is okay. So number one, risk asset conditions in the United States need to improve. Financial conditions need to loosen. And the good news is that they're slated to loosen, right? We have this extreme dollar weakness, which is very positive for liquidity. So the capacity of capital worldwide, that's the number one thing going in Bitcoin's favor. The other thing going in Bitcoin's favor is that there are a lot of rate cuts that are priced in over the next year. We're projected to go from the current policy rate, which is about 3.75%, all the way down to 3% before the end of the year. And given the fact that we're expecting a new Fed chair in May, Rick Rieder or Kevin Warsh or Kevin Hassett, all of whom have promised more rate cuts and said that the Fed needs to bring rates down lower than they are now, that's going to improve risk appetite. And so as liquidity expands and as policy rates come down, so borrowing becomes cheaper, the cost of capital becomes lower, you see a lot more capital expenditure, and you see capital move out on the risk curve. So when we talk about the risk curve, we're talking about assets in terms of their risk and return profile. At the lower end of the risk curve, you have things like cash, right? You have US treasuries and you have cash, these things that either yield nothing or they yield 3 to 5%, right? Which is the current rates along the US treasury curve. You move a little bit further out and you have commodities, you have gold, you have silver, you have platinum, right? That's where capital is flowing right now. So we are at basically the way that capital ebbs and flows, it moves up this risk curve as financial conditions loosen, and it moves down this risk curve as financial conditions tighten or remain the same. And so we've been in this regime where the Fed is cutting rates at the margin, but we haven't arrived at our terminal rate yet. And so if you take a look at all of these assets, if you take a look at this historical behavior for capital to move out on the risk curve, we're bidding gold and silver right now. The next logical step is that we move a little bit further out and we begin bidding equity indexes, right? So you would expect to see the S&P 500, the NASDAQ, the Russell begin to outperform tremendously well relative to gold and silver. That's the next phase. And then the phase that will follow after that is capital moving into even riskier bets, right? So single stocks and Bitcoin. Unfortunately, that's what Bitcoin is most correlated to. It's highly sensitive to risk on moves. And so once we shift from this regime of mostly risk off with the gold and silver rallies to somewhat risk on with this capital then flooding into the S&P 500 and the NASDAQ, the next thing that logically follows on after that, and we've seen this historically, is that capital moving into single stocks and into Bitcoin. And so I would anticipate Bitcoin wakes up from its current doldrums a while from now, if you will, right? So I tend to think, and I said this on Joe's show yesterday, that we're just going to continue to see consolidation over the next month, potentially through the end of Q1, right? As Bitcoin builds this base around the $90,000 level before ascending higher. Of course, there are risks to the downside. I did mention that silver, that back in 2022, Bitcoin did have a similar formation to what it's experiencing now. It failed to break above the 200-day moving average after falling underneath it, and then it proceeded to continue falling until it had a 75% drawdown. I tend to not think that will be the case. I tend to think that the capital flight out of risk-off assets into risk-on assets is probably a couple of months away. And until then, Bitcoin will just continue consolidating. Bitcoin right now is the same price that it was in early December, on like December 10th, right? So we've been flat for a month, relatively speaking. I tend to think that that's going to continue happening over the next couple of months until the rally in gold and silver are exhausted. And then that capital moves out on the risk curve into things like Bitcoin. So all that is to say, to answer your question, I don't think Bitcoin's small market cap is the reason that it's so correlated to the risk on bucket. However, from the performance of silver, we can glean what may happen next for Bitcoin, which could be a move from a sub $2 trillion asset to a $6.5 trillion asset, which would imply a Bitcoin price of over $300,000.
Which I think would shock a lot of people outside of Bitcoin. I think I look from a narrative perspective, like how do people actually look at Bitcoin outside of Bitcoin? That they just like barely glanced at it and they're just like, how is Bitcoin doing? It has been tremendous to see how many people think 100K is like the lid for Bitcoin. It cannot go higher. Like they're like, yeah, now we reached the top of the mountain. How high can it go? And I think if we were to, let's say, in the next 12 months to like New Year's Eve this year, rip to like 300K, go 3x of that limit, I think this would wake up a lot of people. Now, I've said the same thing about Bitcoin reaching 100K. I was obviously very, very wrong. But I think it could really like waking a lot of people up if the money goes out of the risk curve into like Bitcoin and moving Bitcoin from a $2 trillion asset to 3, 4, 5, potentially over $6 trillion US dollars in market cap. There's I try to look at Bitcoin always from a narrative perspective, how the mainstream also looks at it. And we've come from like this tulip thing, this nerdy thing, this for criminal thing, this bad for the environment thing to, yeah, it's an asset that's speculative, but like there's some president that likes it, but like it kind of is expensive. You cannot make huge returns anymore. But the talk of it going to zero kind of went away. The talk that like Bitcoin dies or it's bad for the environment, all of those thoughts around Bitcoin kind of died, even in the mainstream eye. Now I'm really curious to see what would happen, not saying this will happen, just like what would happen if Bitcoin now rips 3x in like 1 year. I think it would, the shock would be huge, and mainstream media, I can't wait to see mainstream media reacting to like a huge Bitcoin bull run that might come.
I mean, Bitcoin's time inevitably will come, right? We've seen this time and again throughout cycles, but ultimately Bitcoin tends to go the route of max pain, right? So if a lot of people are expecting a bull market, chances are one doesn't happen, right? If you recall, Robin, like really close to the bottom in 2022, when we were at like $20,000 before Bitcoin puked all the way down to 16,000 where it stopped, people were not expecting a bull run. Most people were expecting Bitcoin to just die on the vine. And then within several months, the bull run really kicked off, right? And we managed to go from the year that Bitcoin bottomed, we managed to go from 16 grand to 26 grand. The year after that, we managed to go from 26 to I think like $64,000, and then $126,000 later, right? So we doubled, then we tripled, and then we doubled again, right? In 3 successive years. So right now, the key thing that I would be looking for is this capitulation event, right? This reality that sets in amongst the market that Bitcoin may finally be dead, right? Bitcoin has obviously been declared dead many, many times. And so what I'm watching for, apart from the technical levels, apart from the on-chain indicators, is for that final capitulation event to happen, for people to say and start saying confidently, this Bitcoin thing, it was a fun ride, but I think it's over. If and when we see that, I do believe that indicates that the bull run is really kicking off in force. And you do mention a really interesting thing as well, like this idea of the psychological impact of major moves in Bitcoin's price. For a very long time, $100,000 was this fabled level that if and when Bitcoin reached it, it would be like that would be the final price at which Bitcoin will have succeeded. We didn't see that, right? So we didn't see, and the assumption was like Bitcoin's going to break through 100, and then it's going to break through 150, then it's going to break through 500, then it's going to go to 1 million. So that's kind of the assumption that gets held by a lot of Bitcoiners time and again whenever it breaches a key level. I can recall back to 2021 when Bitcoin first hit that $60,000 mark. everybody thought that it was going to $100,000 that year. And it took 4 more years for it to actually reach $100,000, right, in late 2024. So, ultimately for me, what I'm looking for is that capitulation event, at least in the news, maybe not in price, but this maximum pain of just continuing to consolidate sideways. That's the number one thing I'm looking for. But then the second thing I'm watching is $100,000 was such a fabled level. For a very long time, nobody thought Bitcoin would hit 100K, that naturally you have a lot of selling pressure that is at or around $100,000. I mean, think about it. If you were a Bitcoin OG that's been holding Bitcoin since $100, $1,000, $5,000, I don't think you could call $5,000 BTC a Bitcoin OG, but at the very least, someone who's been here for 8 years or more. You never thought $100,000 was going to come. Well, I mean, I guess in some sense, if you were holding Bitcoin, you thought $100,000 was going to come, but it seems so distant, right? We saw the ban in China, and then the ban in China again. You saw all of these different exchange failures, from Mt. Gox to FTX to Celsius to BlockFi, all of these different instances of the world ending for Bitcoin, and then finally arriving at $100,000. What's the natural thing you're going to do? Chances are you're going to sell some or all of your stack. And that's the behavior that we've seen. We've seen this massive distribution from folks who hold a lot of Bitcoin, who've been holding for a very long time, distributing at $100,000, right? And a lot of people say like, oh, there's no dollar price at which I would sell my Bitcoin. But most people are lying when they say that, right? There is a dollar price that a lot of people have in mind at which they'll start scaling out of their Bitcoin holdings, because ultimately the same reason we hold gold is the same reason we hold Bitcoin, is to store value into the future and then eventually use that value for other things, right? Whether it's investment, whether it's buying a home, what have you. And so for the people who've been holding for a very long time, $100,000 has proven to be a huge level around which people sell. And so that could also be a factor that has played into Bitcoin's underperformance since October. We reached these heights that nobody thought Bitcoin would ever achieve. And even though this current environment should mean Bitcoin can rip higher from here, there's just a tremendous amount of sell pressure around the levels that we're trading at currently. And so even though Bitcoin wants to move higher, unlike any other asset, there's this key psychological level where a lot of selling pressure is happening. And I think that once that abates as well, once everybody who's been holding for a very long time finally sells their BTC at this level they've been waiting for years, that could be another constraint holding Bitcoin back that finally sends us higher. It wouldn't come as a shock to me at all.
The most important thing for your Bitcoin journey is not buying Bitcoin, but it's how to keep them. And yes, you have maybe the right tools, but how do you actually go ahead and stick it all together so it's the most secure for you personally? Self-custody is a deeply personalized journey, and the Bitcoin way is helping you exactly finding that correct setup for you personally. They are also helping you with securing your own cybersecurity. And if you want to go one step above all that, you can even get a consultation for a Plan B residency. Go to thebitcoinway.com/Robin and you will get a 30-minute free consultation. I finally and officially mine Bitcoin. This is not just something to stack more Satoshis, but it's most importantly also to support the network. Individual miners are the ones that keep the Bitcoin network decentralized. And by the way, you get KYC free Bitcoin. That's why I use Simple Mining. I get an actual proper Bitcoin miner. They set it up for me. They repair it if it breaks down. And most importantly, they let me choose the pool and even connect my own full node. I'm completely sovereign and I'm completely in control, and I can sign up with Ocean, no account needed. I just give them a Bitcoin address and then there's mining going on. No KYC, nothing. So if you're ready to mine Bitcoin, go to simplemining.io, tell them you come from Robin, and let's mine Bitcoin together. Yeah, this psychology level of, hey, I've held from 2, 3, 4, 5, 6, 7K to 100K. I more than 10x, maybe even like 20x my money. And I now want to buy a house, or I want to kind of make a huge holiday, or like whatever you want to make with the money. All of a sudden you are able to do it. And there was this laser eyes till 100K. And then the 100K was there and we didn't have laser eyes till $1 million. Like we kind of lost this like focus, like let's go 100K. This there's a lot of like those, I think, the psychology things also in there, and it's also normal. Like if you held Bitcoin for 6 years and you made out of, let's say, 10 grand, like 100 grand, like, go ahead, like celebrate. like you held for 6 years, did nothing with the money. You held through a massive drawdown from like almost 70K to like 16K. You deserve a little bit. Like it's normal as a human behavior to sell some, maybe put something in a house, like retire yourself, like whatever you want to do with the money. It's quite natural, and you got a lot more wealthy. Like if you think about a guy that just has a normal salary, no companies, no other assets, just Bitcoin, and he dollar cost averages since the last 6 years, he got a lot more wealthy from Bitcoin, like a lot more wealthy from that. So him celebrating with whatever gift he wants to give himself, I think it's a very natural thing to do as a human being.
It certainly is. Yeah. There is a level at which people will sell their Bitcoin. It's part of our human nature. And ultimately the reason you accumulate wealth is to use it, right? Either to keep it and borrow against it, to sell a portion of it, to fund different life events, to finally pursue your goals and your dreams, maybe quitting the job you're working and starting your own company. Ultimately, wealth is a means to an end. Maybe it's handing it down to your children. It's building a huge nest egg. It's being able to retire early, whatever it may be. There is a price at which everybody sells. But the good news is with Bitcoin and with every other asset, right? With most other assets that have stood the test of time, at the levels that those people sell, there's always a cohort of willing buyers, right? So, but it's ultimately a function of finding that level of supply-demand equilibrium where the price levels out. For Bitcoin, that may be right here at $90,000. It might be much lower, right? That remains to be seen. But one thing that we've seen over Bitcoin's short 17-year history, 16-year history, having a market price, it's that there's always an equilibrium level where the demand outstrips the supply and we ascend higher. Guessing where that is a fool's errand. We can do our best to estimate it, but ultimately we know that these sell-offs in Bitcoin, these periods of consolidation in Bitcoin, they always come to an end once selling is exhausted. We ascend higher, we reach a new level at which the selling pressure, at which the supply exceeds the demand, and we keep moving higher. It's the case with every single asset. It's the case with Bitcoin, with gold and silver over the last decade, basically being the exact same price. And then ultimately there was a level at which demand exceeded supply to a tremendous degree. That too will come for Bitcoin. It's just a function of when. And until that comes, it gives us the opportunity to stack sats at a very, very deep discount relative to where they should be.
100%. I think one more thing I really want to do with you is look in the key technical metrics of Bitcoin. I think you've prepared a few for us because it's always interesting to see where is Bitcoin actually right now, and give some, let's say, data to the feeling that we got in our stomach.
Absolutely. Yeah. So I'll pull up this screen right here. This is Bitcoin's 50-day and 50-week moving averages. Now, generally speaking, and this is why I say Bitcoin is experiencing a pattern very similar to 2022. I'll also add the 200-week moving average in here, just so we can have a little bit of context here. I'll actually go and increase this up to 200 here. Let me go ahead and do that. This should be 1400, just so we can get a sense of like where Bitcoin may bottom during this bear market, if in fact we are in one. I actually don't have the ability to set that, so I won't do that now. But what we can see is that back in 2022, and I'll zoom in here so everybody can see, and this is just very simple looking at technical levels. Bitcoin fell underneath the 50-day moving average, which is a shorter term moving average that tells you about near-term momentum. It tried rebounding. So it broke above the 50-day moving average. It attempted to break above the 50-week moving average, right, which is this much longer term moving average, close to a year in length. And it failed, and then the bear market ensued. It broke down beneath the 50-day moving average once again, and then it failed to meaningfully break above it until December of 2022 when Bitcoin bottomed, right? You can see this chart, this pattern right here. We have an ascending flag, this bear flag during 2022. Well, unfortunately, if we pull the chart all the way back over here, you could see a very similar pattern with Bitcoin as well. So you see this bear flag right here that's forming. Bitcoin broke above the 50-day moving average. It attempted to go up and touch the 50-week moving average. It couldn't quite do it. And it has since broken back underneath the 50-day moving average. So that's where we are right now for Bitcoin. You have this bear flag, you have this dynamic of consolidation, and you have a failed retest of the 50-week moving average. So in my mind, this tells me that chances are Bitcoin may break much lower than it is right now. So then it becomes a question of, okay, if Bitcoin does break lower, what are the levels of support that we can expect that would be accumulation zones or potential bottoming areas? Well, the first one would be all the way back here in this range that was set during 2024. Robin, I'm sure you remember this idea of chop solidation, which was coined by Checkmate, and this idea that, Bitcoin basically throughout all of 2024 was just chopping lower and consolidating and building a stronger base to eventually move from. There's a lot of volume here. And so if Bitcoin were to break underneath $80,000, which is basically where it bottomed in November, this local low, I would expect us to hit anywhere from this $75,000 to roughly $55,000 range down here. That would be my next line in the sand as far as support is concerned. If we are to expect that, even though Bitcoin didn't have a blow off top, Bitcoin still has a drawdown that's similar to what we saw in 2022, then you would expect a 75% drawdown or a Bitcoin price floor of roughly $31,000. Now, I don't expect that to happen because Bitcoin's bull market was much more measured than what we saw during 2021 and 2022. You can see here, going from our cycle low all the way to our cycle high, it took 3 years, or it took a little bit over 3 years. Whereas right here with the prior cycle, it took about 1.5 years. So 18 months to go from our cycle low all the way to our cycle high, right? So that was a much faster bull market. And so it stood to reason that we would have a big sell-off that happened after the fact. But because this bull market has been much more measured, I don't expect us to see a 75% drawdown, right? If Bitcoin is to ascend higher from here, what we want to see happen is we want to see it reclaim this 50-week moving average, hold above it, and then move higher, right? Which could very well happen by the time this show airs. But another scenario that's just as likely, unfortunately, just thinking probabilistically here, is Bitcoin failing once again to reclaim this 50-day moving average, not coming close to the 50-week, and then dropping back down to its next logical level of support, which is 75K. You can see it here. You can see it here toward the top of this range, and then $55,000 underneath that. So in my mind, that's potentially what's in store for Bitcoin. If we have an extremely bad bear market, it's down by that $35,000 level. If we have a little bit more of a measured sell-off from here, you could see levels as low as $75,000 to $55,000. And if we exceed expectations, we don't follow the same thing that happened in 2022. Risk conditions improve and capital shifts out on the risk curve, out of monetary metals into risk assets more avowedly, then you could see this break entirely if we reclaim this 50-week moving average and we start moving higher from there. So that's the way that I view this currently. There is a lot of overhead supply. We are trading underneath the short-term holder cost basis, which is not shown in this chart. Historically, the short-term holder cost basis is the average price at which those who've been holding Bitcoin for 155 days or less sits. That tends to be a level of extreme support and resistance. Because we are underneath it, it acts as a level of resistance. When we hit that level, which we actually did right here, there tends to be a big sell-off because people want to get out of the market at break even. So there's plenty of overhead resistance for Bitcoin. And so thinking probabilistically, I believe there's a 50-50 shot we break up and out of this, or we continue to ascend lower until we can actually form Bitcoin space. But these are the key levels to watch out for.
I would fucking love 35,000. I mean, those prices we haven't seen for so long, and especially as young, I mean, most people that listen to this are around 40, 45. So it might not be true for most of the viewers, but if you are young, like under 30, like you would love for Bitcoin to hit 50K, 40K, 30K. All of a sudden, your salary buys you a lot of more sats. You can load the boat. like there's I would be so excited for 35,000 because I no longer have to fear that Bitcoin dies. Mm-hmm. And if you don't have to fear that Bitcoin dies and you understand what Bitcoin actually is, lower prices just means load the boat. That's literally it. So I got for a moment excited when you said 35K.
Yeah, if you think Bitcoin is dead now, right? Just wait until if we end up hitting $35,000. Oh my goodness, it would be completely insane, right? You're familiar with Bitcoin obituaries, the amount of times that Bitcoin has been declared dead over time. If you think that that's happening a lot now, like just wait until we hit $35,000. If that does happen, right, that would be an extreme bear case scenario. Typically what we've seen is that, and you're probably also familiar with this chart. I don't have it in front of me, but Bitcoin's peak to trough bear markets have declined over time. So in Bitcoin's first cycle, it was a 90% drawdown. In its second cycle, it was like an 80% drawdown. In its third cycle, it was like a 75% drawdown. What we've seen historically is that the drawdowns with each successive cycle grow smaller and smaller and smaller and smaller. And so if we were to draw down by 75% again, that would be unprecedented. So it's not something that I personally expect to happen, but we'll have to wait and see. Ultimately, with Bitcoin, anything can happen. And yeah, but this is the chart right here. And you can see that in the red here, in the white, this is obviously Bitcoin's price. And in the red here, this is the percentage that it has drawn down from its prior all-time high. So you can see here in Bitcoin's first major cycle, we drew down about 94% from our all-time high. In Bitcoin's second cycle, we drew down about 85%. In its third cycle, we again drew down by about 85%. And then again over here by about 75%. In our during the prior cycle, we drew down by a maximum of 77%. In this cycle so far, we've only drawn down by about 33%, right? So the maximum peak to trough drawdown has been about 33 to 34% as of the closing price. So it stands to reason that if Bitcoin were to draw down any further from here, we were to get a protracted bear market, it would follow this sort of trend where Bitcoin's price drawdown from all-time high is lower and lower and lower with each successive cycle. And so if that were the case, chances are what you would see is a price that's down here, right? That's closer to that $80,000 mark where we are currently, or not $80,000, excuse me, that $60,000 mark, that $55,000 mark. If we were to see an absolute bear market low, that's where I would expect Bitcoin to go. And this other chart right here, while we're up on screen, this is these are the other levels that I was speaking about earlier. Up here, you have the short-term holder cost basis, which Bitcoin tested and bounced off of. Above that, you have the 200-day moving average, or 200-day moving average. You have the 200-week moving average right down here. And so right now, Bitcoin is bouncing between its short-term holder cost basis and its a 2-year moving average, right? That's where it's bouncing between right now. We just bounced off the 2-year moving average once again, so this range is narrowing, and Bitcoin is at this decision point. Will it break higher? Will it break above this level of overhead resistance that's proven very difficult to do, or will we break down below this 2-year moving average, which historically has marked the entry into sort of the second half of the bear market? This is what James Check calls it. You could see back down here, this guy sort of was a demarcation line between the first half of the bear market, which you could see here, late 2021 into the middle of 2022, into the second half of the bear market, mid 2022 into late 2022. So Bitcoin is at a decision point here. I'd wager by the time we air this, Bitcoin will have done one of those two things, either broken above one or both of these key levels, or broken down below this 2-year moving average and is on its way toward this 200-week moving average at an absolute bottom. I think that by the time this airs, we'll have done one of those two things.
Then we can see, I guess, what happened. But one more thing that I'm interested in now came in my mind when we now have very different buyers than we had in 2013 or 15 into the market. We now have the sailors of the world, the Larry Finks, the institutions, even pension funds in buying Bitcoin. And I just think they have a very different buying and selling behavior than the average Joe that the you and me and like the listener here that might just like buy and sell Bitcoin differently, has different needs and have different kind of like perspectives of like what to do when the Bitcoin price hits certain things. So what do you think will happen in the future when like there's more institutions, more pension funds, and more like bigger companies buying Bitcoin with their ratio of like, oh, I want to hold 5% Bitcoin. So if it rips up, I sell some. If it goes under 5%, I have to buying, like all those rules that also institutional buyers sometimes have, with the crashes, with the blow off tops, and with the general movement of just the Bitcoin price.
Yeah, I mean, we've already seen the impact of this since January 2024 when the ETFs were first launched, and that is that Bitcoin's volatility has declined pretty markedly. So Bitcoin historically was an extremely volatile asset. It would do nothing for a really long period of time. Then all of a sudden it would rip higher and then it would crash lower. What we've seen since the start of 2024 is just steady, reliable, stair-stepping price action. So we jumped up from 40K to 74K, and then we jumped up to 100K, and then we jumped up to 126K. That's kind of been the MO that's dominated Bitcoin, as the inflows have been dominated by passive flows, by pension funds, by these people who are passively allocating to their retirement fund every 2 weeks. I tend to think that behavior will continue. However, I don't think that Bitcoin's previous historical tendency to have these major periods of outperformance will go away, right? I think that's still in the cards for Bitcoin, right? I'm talking about days where it jumps up 10% in a day, 15% in a day, 20% in a day. And the reason that I say that is because of what we've seen in silver, right? I think the dominant narrative since the ETFs launched in 2024 is that Bitcoin is no longer a highly volatile asset. That is a thing of the past. It's gone away forever. But two things have wildly disproven that. Number one, when Trump got elected, Bitcoin managed to jump from $70,000 to $80,000 to $90,000 in like 2 days, right? Over that period, we spent, I think, less than a day in the $80,000 level. Like the entire range of 80K we skipped, right? Because of how bullish of an event that was. So that tells you that the idea that Bitcoin can't have these major moves in a single day, that's out the window. That's not true. Also, unfortunately, to the downside, we saw that again on October 10th, right? The fact that this idea that Bitcoin can't have these major volatile moves, that was thrown out the window on October 10th and October 6th, I think, when it started, when we topped, when Bitcoin declined very rapidly. And also the other reason that that's disproven is that what silver did, right? This 3x over the course of 6 to 8 months. It proves that even an asset that's $2 trillion in size can move when market forces want it to move very rapidly. So even though I think Bitcoin is less volatile than it ever has been, that historical tendency for Bitcoin to jump wildly on a daily or weekly basis is still very much in play. I think one of the things that has caused the immense decline in volatility has been the fact that now we're dominated by passive flows, but if and when we see this massive surge into risk-on behavior, I think Bitcoin will still be the beneficiary of that in outsized fashion as it historically has been. So be on the lookout for 5% days, 10% days, or more. It's solely a function of the external catalyst that could cause that to happen.
I agree with that a lot, and I think especially when we see the chart of Weimar Germany and the gold price, when money dies, when the US dollar just like keeps on inflating away, I think Bitcoin's volatile days might just be ahead of us and not be behind us. It might be the calm before the storm or something like that. But yeah, let's see what happens. I foresee that the next 10 years will be very exciting in Bitcoin. let's keep it at that. Thank you so much, Joe, already for being on. We have an end routine in the podcast where the previous guest is asking a question for the next guest without knowing who the next guest actually is. And the previous guest asked you the question, do you think, it's a very different topic now, but do you think the transition from fiat to Bitcoin will be a peaceful or violent one?
That's a good question. I think the closest analog we can get to this is what's happening with gold currently, right? The transition from fiat to hard money. So far, it's been nonviolent, right? So far, it has not been this violent revolution where the United States and other fiat currencies are grasping for air. And as such, they treat these things very violently. However, what we are seeing is that, for example, the export controls coming out of China on silver. Countries will do whatever they can in order to prop up their currency and make sure that it survives into the future, right? If and when hard money presents a threat to that reality, to that hegemony, then ultimately what we do see is that whether it's physical violence or whether it is trade violence, like we've sort of seen in China. I guess they're stretching the definition of violence. Ultimately, these countries will do whatever they can in order to prop up their currency and make sure that they maintain their hegemony. So I think at some stage it may get violent, but the only difference is that with Bitcoin, there are no export controls on it. Right? You cannot ban this thing. You can obviously pass a law that would prevent people from purchasing it in their ETFs, what have you. But as far as self-custodied Bitcoin is concerned, there's not much you can do as far as taking that from somebody. So I think that if the transition is underway, which it seems like it is, from a fiat standard to a hard money standard, the violence will come on the side of the gold and silver, the other analog hard assets. It will not come on the side of Bitcoin.
Interesting. I think so too, but like it's interesting because like Bitcoin has this non-physical layer to it where you have a very hard time going against Bitcoin or the Bitcoin holder in a violent way because you have no clue how much someone actually has in Bitcoin, how much, like how he stores his Bitcoin. There could be like a wallet that he has at home, but it's just like a decoy wallet with like 1% of his wealth in there. And the rest of it is like multi-jurisdictional, time-locked, whatever you want to do. And so it's like, it's just very hard to go violently against Bitcoiners. And that's like I think it will be obvious over the long run that any violence against Bitcoin is a very stupid violence because there's a higher return on your investments, a higher return on your violence with every other asset, with every other thing. So it's an interesting one, but at the same time, it does challenge a lot of ideas that are currently holding up. And so, like, what happens if those institutions realize that? It will be interesting. Again, as I said, the next 10 to 20 years, I think.
Yeah, to say the very least. I agree.
Really cool. Thank you so much, Joe, for being on. Before I let you go, where can people find you, the work you're doing, the companies that you're involved in, and everything else you want to shout out?
Absolutely. Well, Robin, thank you so much for having me on. You did mention that your audience tends to skew a little bit older, so you could find me at Joe Consorti on X. And for those of you who may be in that age range, 45, 30 plus, and you own a home, if you're looking to convert your home equity to Bitcoin, you can check out joinhorizon.com. We're building a company that helps homeowners convert their home equity to Bitcoin. We've already helped hundreds of folks in the United States do just that. So if you're interested in doing that without monthly payments or debt, you just want to move out of an asset that's not doing much for you and into an asset that is doing much more for you, you can check out joinhorizon.com.
Thank you so much, Joe, for being on the podcast. And also thank you so much for everyone that is watching and listening for joining us today. As always, I'll be back. This content is for educational and entertainment purposes only and does not constitute financial advice.